Now, as we turn to segment 4, we see some of the things that are happening in Europe. Now, just to start off, when you look at the ECB, not surprising to see that the refinancing rate held at 4.5, the lending facility 4.75. So really things just held over. But the bigger comment or the bigger issue that the market had was they said higher for longer. And realistically, anybody that thought it was going to be any different, really hasn't been paying attention to the level of stimulus that has happened over the last decade or so. Obviously they had their QE during 2008, but things really took off when Draghi went absolutely ballistic during that, starting in 11 onwards. So when you start looking at the pressure points, it's important to look at money supply. So money supply obviously declined 1.2%, but it's important because there's negative debt out there. So you had to pay to borrow, which is insane in its own right. But again, there's so much pressure out there that it's going to take time because they've had so many programs, so much stimulus. So even though Eurozone manufacturing PMI was expected at 43.7, came in at 43. Service PMI expected at 48.6, came in at 47.8. Eurozone Composite PMI expected at 47.4, came in at 46.5. You might think like, oh, they're going to have to ease. They physically can't. Inflation is still higher, and getting stickier. There's a lot of reasons why they're stuck at these levels because they need to see these pressure points really come down. The Eurozone manufacturing is where kind of we expected it to be. The service side has actually fallen a bit faster than we were expecting. We've been talking about how we expected service to catch up to the downside. Excuse me, but you can see just how quickly that has really come to pass. Now we look at Germany. PPI slowed down a bit, expected to be at 0.4, came in at negative 0.2. That is a positive for the hopes when you look at the inflation front. Consumer confidence got a bit worse at negative 28.1, below estimates. Then you look at manufacturing, it came in at 40.7, slightly better than estimates. But services was expected to be 50, came in at 48. Our whole view has been services are going to go negative. That has been the crux of our commentary, is that the service side of PMI was going to come into contraction and here we are coming in at 48. Composite then came in at 45.8. So when you look at business climate, right around estimates, current assessments slightly better. So then when you start looking at some of the German expectations, again, its expectations are kind of flatlining, but they're so negative. It's going to find some sort of stability, but service sector, again, kind of that flatlining in general, still in that slight contraction. Manufacturing, trade. The problem is trade for them because trade is such a big part of GDP. It's an underlying problem with construction, again, moving lower, which it just speaks to the problems that we continue to see. So risky European companies pay highest borrowing premium since 2016. And again, it's when you look at the setup between US and Euro. So yes, US is going up, but the European companies are seeing even more pressure because, well, what is your input cost? Input costs are getting more expensive and harder to dictate given the Russia-Ukrainian war, given the amount that these countries have to rely on the international market and the floating market for a lot of their core pieces of the business. And then when you look at trade with exports being so important, well, your demand centers are down. So what is your risk? And this is where you're seeing more risk being factored into lending into the European markets, which realistically, I think does make sense. All the while, Eurozone loans to businesses continue to fall. Eurozone loans to households continue to fall as well. That's something that we do see this going negative, and that will help kind of slow down some of those inflationary pressures. Composite new orders came in negative again for all of the Eurozone. Again, that leading indicator for the pressure. And then the same can be said for Germany. When you look at new orders, slight bounce, but again, steeply in contractionary territory, which is where we see a lot of these pressure points continuing to remain. Changes in credit standards for loans and credit lines to enterprises and contributing factors. Banks in the Eurozone tightened credit standards further in the third quarter due to rising interest rates and a worsening economic backdrop. The cumulative net tightening of credit standards since 2022 has been substantial, which is consistent with the ongoing significant weakening in lending dynamics. But when you look at it in general, the credit standards are remaining elevated, so you need to slow down those pressure points, and the change in demand for loans and credit lines are a contributing factor because people are like, well, I'm not going to pay that price. So they're going to slow down on spending because they're like, look, I'm not willing to pay that interest rate. So I'm going to have to tighten my belt and slow down some of those different spending points, which is a key piece in general. Then when you look at France, business confidence slightly below, production outlook negative, retail sales came in at negative 4.3%, worse than last month. Manufacturing PMI expected at 44.5, came in at 42.6. Services expected at 45, came in at 46.1. So again, kind of that balancing act in terms of the composite coming in slightly better, still in contraction, but new orders, which is that key leading indicator, steeply in contraction, big drop off, employment, big drop off, which is why we see France as kind of like, the last shoe. Well, I shouldn't say the last shoe to drop because there'll be others, but France is the best country, relatively speaking, against, France and Germany are kind of the two best. But this one has more to fall. And when you look at an economic standpoint, Italy is the worst, but again, it's also the most to fall because the ratios between Italian debt and German debt are still artificially tight. But I think a lot of people expect Italy to get worse, where I think France is the one that is a good place to play in terms of to the downside because Germany's already there. I think France is going to continue to worsen. French service PMI got that little bit of a bounce, but then the German service PMI, again, dropped, but you can see the kind of back and forth in terms of where they are. And French services could get slightly better with German services getting worse, but they're all moving into that contractionary footprint. Incoming new business in Germany continuing to go into contraction, which is why we do see Germany being the largest entity in Europe continuing to fall down. Eurozone Composite PMI, as we've been saying, but also the confidence indicator rolling back over is, again, some of these pressure points that we've been talking about. So consumer confidence in Germany, that key crux of finding some of that strength and support continuing to roll over. So when we look at what the ECB is doing, they're trying to raise rates, again, to bring down those increase higher interest rates, and it's going to hurt the housing market. It's going to bring down that housing market. But as you bring down housing markets, and pricing, you also bring down that inherent consumer confidence because they're seeing pressure on their portfolios, especially if they're landowners. But look at the ECB balance sheet. They're still close to $8 trillion on the balance sheet. And as we said before, they started well before 2011. But during that 2011 crisis, you saw this big explosion. And then it's been continuous. When you look at 15 onwards, it was a relentless increase and expansion based on different programs of the PSPP plus the PEPP. All of these things have to come out of the market. This is all of that excess liquidity. And again, when you look at everyone's like, oh, well, money flows are slowing. Look at versus 2020. We're still above. The ECB is still above where it was 3 years ago. So there's a lot of work to be done to slow a lot of these pressures and to slow a lot of these underlying components. Non-EU citizens ordered to leave and return following an order to leave, again, continuing to move a bit higher. Non-EU citizens, again, seeing these shifts, and it's happening more and more as the pressure continues and people are trying to get or becoming a bit more protectionary or more protectionism when you look at trying to keep those jobs in-house. German PPI with the bigger drop. But again, as we said, now with the UK, same confidence indicator, same drop in general, more pressure coming Then when you look at the France Business Survey, overall demand, trending lower, we do see this, again, having that negative trend based on the service side, based on the manufacturing front, as we see more pressure ongoing. So that's what we have here on the European front. In the next segment, we're going to go deeper into Asia and the pressures that we see coming out of China as we progress through Q4.